attorney Laura Anthony, founding partner of Legal and Compliance, a full-service corporate securities and business transactions law firm. Today is the 6th segment in a multi-part LawCast discussing OTC markets and, in particular, the different quotation levels and listing criteria for each level. In the last LawCast in this series, I introduced the OTCQB marketplace and gave a brief overview of the quotation criteria. Now, more particularly, to be eligible to be quoted on the OTCQB, all companies are required to meet a minimum closing bid price on OTC markets of a penny for each of the last 30 calendar days, subject to certain exceptions. That is, in the event that there has been no prior public market and a 15C211 application has been submitted to FINRA by a market maker, OTC Markets can waive the bid requirement in its sole discretion. In the event that a company is a seasoned public issuer that has completed a reverse stock split within 6 months prior to applying to the OTCQB, the company must have a post-reverse split minimum bid price of a penny at the close of business on each of the 5 consecutive trading days immediately prior to the application. In the event the company is moving to the OTCQB from the OTCQX, it must have a minimum closing bid price of a penny for at least one of the 30 calendar days immediately preceding the application. Companies cannot be subject to bankruptcy or reorganization proceedings. Companies must either be subject to the reporting requirements of the Securities Exchange Act and be current in such reporting requirements, or if they're an international issuer, they can be eligible to rely on the registration exemption found in Exchange Act Rule 12G 3-2B and be current and compliant in such requirements. Or if a bank, they must be current in their reporting obligations to their bank regulator. Companies must be duly organized, validly existing, and in good standing under the laws of each jurisdiction in which they do business. They must submit an application and pay an application fee of $2,500 and pay an annual fee of $10,000 per year. Companies must maintain a current and accurate company profile on the OTC Markets website. As always, details determine diligence, and OTC Markets requires an accurate, detailed company profile. Companies must use an SEC registered transfer agent and authorize that transfer agent to provide information to OTC Markets about the company's securities, including the shares authorized, the shares issued and outstanding, and share issuance history. And companies must submit an OTCQB annual certification confirming the accuracy of the current company profile and confirming and providing information on officers, directors, and controlling shareholders. All companies are required to post their initial disclosure on the OTC Markets website and make an initial certification. In the next LawCast in this series, I will continue with the particulars of the initial disclosure and initial certification requirements. I'm securities attorney Laura Anthony, founding partner of Legal and Compliance. Should you have any questions about today's topic, please visit securitieslawblog.com and lawcast.com or contact me directly. Inquiries of a technical nature are always encouraged.